Again, my name is Justin Aquino. I'm a leadership and communication coach based here in New York City, and I work with professionals and business owners, startup founders on presentation skills, public speaking skills, pitch skills. Hello.
Hey, how you doing?
Come on in, there's a chair right behind you there. So we're going to be looking at the investor pitch. So I'm going to divide this into two sections. The first section is just general tips, things to keep in mind when you're pitching investors, accredited investors, could be friends or family, whatever the situation is, but good general principles to keep in mind. And then the second is going to be the actual structure of the pitch, so specific elements that you need to include in your pitch, okay? But before I get to that, I need to get to this. Arif Hilali, Sequoia Capital. It still surprises me how often we can get 20 minutes into a meeting without a clear picture of exactly what a company does. Okay, think about that. Sequoia Capital, one of the biggest venture capital firms in the world. Okay, and this guy is generous. He's a really nice guy. If you look him up on YouTube, really sweet guy, smart and everything, former entrepreneur himself, so he knows the situation, but 20 minutes is generous. I mean, sometimes when you're speaking to an investor, you don't even have 15 minutes, right? You gotta condense everything tremendously, and so that brings us to our first point. Number one, concision. You have to be concise. Keep in mind that investors are people with more money than time. Okay, hopefully, anyway, right? Because that's why we're approaching them, to try to get money, right? Because they have capital, they have money available to invest in us. So you got to be concise, you got to be straightforward, and you got to get to the point. One of my clients is a venture capitalist, early stage investor himself, okay? And so he regularly gets pitched. He gets pitched probably a dozen times or more every week. And so I've learned a lot just working with him on the typical mistakes and errors that people make when they're pitching to investors. But concision is a huge thing for him. And then number two is clarity and simplicity. So are you clear, and are you able to summarize your ideas in a simple, straightforward way? Because a lot of times what is obvious to us as entrepreneurs or business owners is not obvious to a third party, right? And I'm going to come back to this in a second, because this is a really important concept as well. Specificity, number three, same thing. You got to get specific. Specific about your company, specific about what it is that you're offering, what makes you different, specific about the market, the industry. The key is specificity. It's very tempting and it's very easy to kind of fall into a generalist, abstract kind of approach. The key is to get specific, because that's what enables you to communicate very clearly with the investor and understand what it is that you're offering. Number four, passion. You got to be passionate, right? I mean, if you think about it, what is it that really attracts a VC or an early stage investor, an angel investor, into a small company like this? It's passion, it's the enthusiasm, the excitement that they have for their purpose or for their mission, right? Otherwise, they're just going to park their money in the stock market. They can get 8, 10, 12% a year, no problem, right? The whole idea is that there's a tremendous amount of growth potential for these small companies, because these are scrappy companies that are really working hard to create something new and different. So don't neglect your passion and your enthusiasm. It's that emotional aspect of it that is really exciting and engaging. It makes you very interesting to a potential investor. Number five is to personalize it, okay? So personalize it and make it relatable. Make it relatable, right? So a lot of times when we are talking in terms of product or service, it's easy to fall into that trap where we're just kind of objectifying it. It's this other thing that's out there hanging in the universe, right? And we're talking about the product, the service, or even the company, but then we lose that personal element, right? So if you're able to show, maybe tell a personal story, maybe you have a family member that suffered from some kind of medical condition, which applies to one of my clients, and then that inspired him to start his company and to start his startup. Sharing that kind of a story is really powerful, because it shows, again, you're passionate, and it shows the personal connection, and it makes you even more persuasive to the investor, because now the investor can say, oh wow, you know, I had a similar situation, or I understand where you're coming from, and so they're able to understand the framework a lot better in that sense. And then number six, don't read your slides and speak conversationally. Okay, classic mistake that people make, especially newbie presenters, people new to public speaking. I see it all the time with clients and students, is to you have a big slide on the big screen and you're just reading it like a script, word for word. It's a tactical issue, but it's really annoying. You know, the investors hopefully are smart people. That's why they have a lot of money, right? they don't need you to read for them. It's not, Mr. Rogers read along on Sesame Street, okay? They can read. If they're just going to read stuff, you can just give them the literature and say, adios, see you later, call me if you have any questions. The whole idea is that you're there as the founder or as the person advocating for your company. There's that personal element. That's what makes it really unique and special. So moving on, number 7. You got to believe in your company, but don't exaggerate, okay? Classic mistake that a lot of entrepreneurs make, and I've seen this myself with some people that I've worked with over time, is you're so excited and you're so gung-ho about your project or your company that you start to get a little fuzzy with the numbers. And as Tiffany will say, there's a lot of legal issues that might come up with those kinds of things. It's one thing if you're just sitting over beers talking with people in a bar in a very casual setting, but it's another thing if you're actually making a legitimate pitch for capital, to raise capital for your money. You can't exaggerate. You got to be honest and straightforward while still being enthusiastic and believing in your potential. Number 8, just general rule on the slide deck. 10 to 15 slides max. It's not a hard and fast rule. It's not written in stone, but 10 to 15 slides and delivered in no more than 20 minutes. If you can do 10, 15 slides in 20 minutes, then you have a nice solid pitch, and you're going to be able to cover everything that you need to cover in that 20-minute time span. You're in a really good place. Now, sometimes, like the guy that I mentioned earlier, they will give you 40 minutes or an hour. They'll literally sit down with you for an extended period of time, and then you have a lot more freedom. But the key is, if you're able to condense it into even just a 5-minute pitch or a 10-minute pitch, then you can take that same pitch anywhere, no matter how much time or how little time the investor has to spend with you. You'll be able to get everything out that you need to get out, okay? Again, it's not written in stone, but it's a good rule of thumb. Number 9 is to pitch an investment, not a product, okay? So this sounds a little esoteric, but here's the thing. It's one thing when you're selling to a potential customer or you're selling to a client. If you're a successful founder, as many of you are, you're good at sales. You're able to get sales. You're able to convince people to purchase your product or your service. When you're selling an investment, it's a totally different story, right? It's not just the qualities of the product and the service, but it's also the track record. It's also the team. It's also the growth rates, the future profitability, right? All of these other factors are coming into play from an investor's point of view. So you want to be able to think like an investor. Don't just think like a founder. Don't just think like a customer or a consumer, which is also very beneficial in other aspects of business. But think like an investor, because an investor is really looking at a lot of details that you wouldn't necessarily think about in a day-to-day context, okay? And then finally, number 10 is to anticipate challenges and address them. Don't hide from them. Don't try to sweep them under the rug. Because investors, if we're talking about serious people with serious capital, they're smart people. They've been around the block a million times. They're going to do their due diligence. So if you don't know something about your market, or you don't know something about your customers or your competitors, they have the resources. They're going to do the due diligence before giving you one dime. They're going to be able to figure it out. And if there's any challenges or issues there, you want to be aware of those, number 1. And number 2, you want to be able to address them and explain how your company is able to fight those challenges and be able to overcome those, right? So it's better to just be completely open and honest and straightforward about all of the challenges that your company faces, because every company faces challenges, right? There's no question about that. There's no company that is just in a perfect, pristine situation. So you're going to be able to address those and address the challenges and how you're able to overcome them in an honest and straightforward way, okay? So those are your 10 major tips to keep in mind for the pitch. Now, when it comes to the pitch itself, okay, what are the main elements of the pitch? Okay, and I'm not reinventing the wheel here. Some of you may have heard some of these before, and this is roughly in chronological order in terms of how you would deliver the information during the course of the pitch. It's not necessarily, again, written in stone, but generally speaking, number 1 is the problem. So the problem is either going to come at the very beginning, first thing that you introduce to the investor, or near the beginning. So the problem is, what is the problem that I am solving with my product or my service, right? And how big is the problem? Being able to explain it, this is where that personal aspect comes into play. This is where the personalization, the personal connection, this is where the passion and the enthusiasm comes into play. Because, I was so frustrated with this issue, in my shower head was, annoying me for years and years. And then I finally came up with an invention. If you can show that frustration with the problem, right? then again, the investor is more likely to understand the depth and the extent of the problem. Then number 2 is the solution. That's you. That is your product or service or your company and everything that your company is bringing to the table, right? So being able to articulate that is extremely important, because otherwise, I'm the investor, what am I investing in, right? Okay, I understand the problem, I gotta know what's the solution here to this problem, and that's the value that you're offering. Number 3, the competitive advantages and the features of your product or service, okay? Competitive advantages. So, as an entrepreneur, a lot of times we have the attitude that there is no competition, right? I don't believe in competition, and I totally understand that, because as an entrepreneur, I don't believe in competition, right? It would be folly for me to believe in competition, because I'm one of a kind, right? I'm totally unique and different. I'm offering something that no one else is offering. That's what enables me to push my products and services into the marketplace, even though there's other people in that space already, right? But as an investor, you're damn right I'm believing in competition, right? There's always an alternative. There's always something else. The CEO of Netflix said recently, one of our biggest competitors is sleep, okay? So even if your competitor or your alternative is just to not adopt your product or your solution, that's still an alternative that is worth addressing. And within that context, explaining what is the competitive advantage that your company or your service provides to the marketplace, right? And the features. This is where you actually get into all the specific features and all the different unique qualities of your product or service that enables you to distinguish yourself from the competition. Demo, 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 okay? Demonstrate as much as possible. I cannot emphasize that enough, because a picture is worth 1,000 words, a demonstration is worth 10,000 words, all right? Especially if you have a specific product, certainly if it's a new invention or any kind of consumer good or consumer product like that, you have to demonstrate how it works. You know, my investor client that I mentioned earlier, he's on HSN several times a month pitching and presenting his companies that he's invested in, right? And so he's actually going to demonstrate on TV, on live TV, what his product or service is actually delivering, right? So you got to be able to demonstrate it. If you can't demonstrate in the form of a live product, maybe you can do a mock-up, maybe you can do a prototype, maybe you can do a screenshot, maybe you can do a GIF. Any kind of visual is super, super important. It's very important that you're able to somehow visualize it for the investor, to take it out of the realm of just words and numbers and to make it concrete. Okay, even if it's like an enterprise software solution or something like that, it's kind of intangible, still try to demonstrate it as concrete as possible. So that's number 3, the competitive advantage. Number 4 is the traction, the track record that your company has. Okay, what have you accomplished so far? You got to be able to break this down step by step. Your milestones, your accomplishments, your achievements, what have you done well, what are you still struggling with, right? There's a lot of great conversation that can happen here at this stage of the game. We're going to take questions at the end, by the way. Number 5 is the market opportunity and the size of the market. How big is the market? How many customers are you potentially going to be selling to, right? Very important to address this, because from the investor's point of view, again, thinking like an investor, okay, there's a problem, there's a solution, the solution looks good, I've seen a demo, everything makes sense, everything is great, but how many people are actually suffering from this problem? How big is this opportunity really? Because that affects the sales, that affects the revenue, that affects the earnings, which in turn is going to affect the investor's return on their capital, right? So you got to know this stuff inside and out. You got to know your market inside and out, because guaranteed, if you're talking to an investor that has a good amount of capital, hundreds of thousands, even millions of dollars, they're going to poke holes in your presentation, right? Because they're trying to see how strong is it really. And again, they have the resources to do the due diligence to figure out exactly how big is the market opportunity here. So it's very important that you know that and you're able to explain that. Number 6, the competition. Here, again, there is competition. You know, we don't want to believe that there's competition, but there is, right? And we have to be honest about that and think like an investor in that sense. And we have to know our competition, right? So in every pitch, almost every single time, there's going to be a discussion about who else is in this space, right? Who else is playing here? Who else is delivering products or services here? And then where do my company, where do we fit in within this overall industry or this sector, right? So that conversation is very important to have. And it's important that you know your competitors inside and out, and you know the numbers associated with that, specifically what they're offering, what's good, what's bad about them, and then therefore what enables you to distinguish yourself. Number 7 is the business model and the revenue model. You got to know your business. You got to know your numbers. Anybody watch Shark Tank here? Okay. How often have we seen, if you're a regular viewer, like a total Shark Tank nerd like I am, how often have we seen Mark Cuban ask this question or Kevin O'Leary ask that question about sales or about growth, and they're like, yeah, we're growing, And
it's like they didn't prepare.
They didn't prepare. You got to know your numbers, exactly. You got to know your numbers. You got to have that information well in hand. You got to have your customer acquisition plan very clear and very straightforward. You got to know what your future growth projections are. You got to know what's your overall strategy there. And you got to have realistic numbers, right? This is very important. This is another thing. I mean, you can't just say, I made $100,000 last year. Next year, I'm projecting $50 million, right? That is not a realistic growth projection. Although you may fudge the numbers in some way, shape, or form, to be able to arrive at that growth projection, but a savvy investor is going to know there's holes in that argument, okay? So, has to be realistic. And the issue of realism also is going to come into play when it comes to the valuation, right? So if you're exchanging equity for capital, $100,000 for 10% equity in my company or something like that, then it better be a realistic valuation, and you better know what is valuation based on and what constitutes valuation. That's a whole other conversation. We could have a whole day seminar just on how to value a company based on sales, based on projected earnings and stuff like that. But you got to be realistic with that stuff. Okay, so getting towards the end here, number 8 is the exit strategy. So I'm an investor. You've convinced me to put my money into your company. Okay, great. I put in $500,000. How do I get my money back, right? Because these are what we call illiquid situations. It's illiquid marks. You invest in GE stock, you can sell your stock, you get your cash pretty much right away. But if I put $500,000 into your company, that $500,000 is potentially gone. Potentially it's gone forever, first of all. That's the risk that I'm taking. But it could be tied up for 3, 4, 5 years, right? So after that 5-year mark, how am I getting my money back? What's the exit strategy? Is it an IPO? Is it an acquisition? Are you going to sell your company to a larger entity? Is it a licensing deal, right? Or what's the specific exit strategy that you're thinking about? And you're going to have to be able to articulate that. Not in all cases. I have to include this because for many investors, this is very important for them to know. Some investors don't care. They're just focused on, what's the growth of the company? I think I can get my money back, no problem. They're not worried about this. But many investors are, so it's worth it for you to give some serious thought to a potential exit strategy and how your investor or investors are going to be able to get their capital back. And then number 9 is the team. Who are you exactly? What qualifies you to play in this space? What is your expertise? What is your specialty, your background? Not just you, but all of your partners, everybody on the team. Because fundamentally, as investors, we're investing in people. Right? We're not investing in this, abstract entity. Why is it that when the CEO of a Fortune 500 company is caught in the papers having an affair, that the share price tanks? Right? Because we're invested in people and the decisions and their backgrounds and their competencies, right? So it's the same thing, even more so here with startups and small companies. So if you're just 3 individuals that I've never heard of working out of a WeWork, and you're asking me for $1.2 million, no offense to WeWork, but I better have confidence in who you people are and that you're actually qualified and you're going to take good care of my capital, right? Again, thinking like an investor. And then finally, number 10 is the best part, the ask, right? Finally, we get to the money. How much are you asking, and what is the purpose of the money? What are you actually going to use it for, okay? You got to be able to articulate this, and again, specificity is the name of the game. It's not just, we're going to invest in marketing, or we're going to invest in a new office space or something. You got to break it down and be able to break it down line by line, right? That shows professionalism. That shows that you're really prepared, okay? So that is how you build your pitch.